there are kids, so to speak, running these companies that haven't been through a bear market before, or a real bear market, like a real one where it's not just their asset, but it's everything.
Everywhere.
That's a very different environment.
So, Patrick, thanks for coming in today. I appreciate it. I knew you came up from Austin.
Sure thing, Frank.
So I've done a radio show on an AM station here locally, and recently the station got bought. So I was looking for something new to do and ran across Ryan at the Texas Blockchain Council down at Consensus. You were there as well. And he said, hey, I have this great studio. Why don't you bring your show over here? And I said, yes.
It's a nice studio.
That's it. It is a nice studio. I kind of like it. So you work over Blockfills now. You've got, you guys do institutional crypto. Well, actually, I'll let you tell kind of what you do. But tell me about your story. Tell me your history. Like, you came from the traditional finance side. What was your path to the crypto trading
world?
Yeah.
So I got involved in the futures industry when I was in my early 20s. I was in school at the University of Iowa. I worked at a futures brokerage the summer before I graduated.
Thought you were going to tell me you were a corn farmer.
Yeah. Well, actually, that kind of came in handy going into the futures world.
Yeah, right.
And it's actually very relevant today when we get into the hedging conversation.
Yeah.
But I got involved in the futures business early. Got my Series 3 before I graduated school. Landed at a brokerage company in Chicago, and I was there for almost 17 years, actually. So I stuck with the same firm, and the company was sold, and that was kind of like my cue to exit.
Was that right around the time that all the exchanges like ICE came in and started popping everybody out? Or
no, it was a little bit later, but there was definitely a really dramatic consolidation in the futures business over between 2010 and 2020, and just sort of going more and more electronic and more and more competitive, essentially. And there was a lot of consolidation, and that, sort of contributed to my situation. And I had actually known the CEO of Blockfills from my time in the futures industry, like in another lifetime ago. And, we got reconnected, and that's how I joined Blockfills. So it's been about 18 months.
It's awesome. Yeah. It's been a crazy ride, right?
Yeah, sure has. Interesting timing for sure.
So, yeah, it's interesting because I remember, and I like to laugh about the futures and commodities industry. I joke sometimes, and I kind of sometimes get a little patronizing when it comes to my part of the industry. So my history is started off right after college. I got my degree in history and then somehow made my way into finance. I don't know how that works, but worked for Fidelity for a couple of years, and then was transferred up to New York, right, literally at the mouth of Wall Street, where I really learned my craft. And it was a big mistake in how I did it, because I was offered a job at the Park Avenue branch, and I took the Wall Street branch thinking that's where the money was, and that's where, I would definitely learn a lot more. Well, I was right halfway. That if you actually work at the Wall Street firm, there's not a single guy that isn't smarter than you.
Right.
And if I did not know the answer, I should just say, I don't know, and learn it. As opposed to being where people live, and maybe they aren't on Wall Street, and so they'll believe almost anything. And so that was the really hard part of the, 25 years ago, our industry was so different. There were representations were terrible. So Boiler Room came out as a movie, never seen it because I can't be bothered with that, or some of the other ones, Wolf of Wall Street. I'm
great
film. That's fantastic. I'm like, I can't watch it because that's everything that's wrong with my industry or what it was.
Fair point. Yeah, fair point.
But it was it's just interesting that coming back down here to Texas, everything's grown up a lot, and there's tons of money here and tons of really smart people. And I didn't know that back when I was younger. And now that I'm here, it's kind of fun. Now, you had a fun journey. You came from from Chicago to Austin.
Yeah.
And look, we even have you wearing the shirt.
How about that? I know. I'm a full convert. Yeah, my wife and our daughter was 18 months old at the time. We were living in sort of like the Wrigleyville area in Chicago. And we were just looking for a major lifestyle adjustment, with the weather and just I was in my office at 5:30 in the morning every day, and for a long time, 15, 17 years. And so, we were just sort of seeking a change, and we ended up in sort of a suburb of Boston. And then when I got down here, I met a lot of people who were, had ranches and property and deer leases. And so I started to spend a lot of time out there.
Yeah.
And that's when I really got called to the idea of like living a little further out into the country.
Yeah.
So I live in, the Dripping Springs area, and I've got some longhorn cattle and some chickens, and now I have 2 kids, and wanted to give them kind of that interesting, upbringing. That's how I landed there. Yeah.
Yes, I started off, it was so weird. Born in Manhattan, born in Queens actually, and then grew up here. So since I was like 4 years old up until I was about 20, probably 26, and then I moved up to New York and spent, 20 plus years up in Manhattan. And, the one thing that I thought was really rough living up there was seeing my friends with their kids and how fast their kids had to grow up in a big city. I'm not sure. I have to suspect that Chicago's probably a similar way. A kid goes out of their apartment or house, they immediately have to be kind of on the ball. They don't get to be kids. And when they move down here, you have them out there. They have a neighborhood. They've got friends. They've got all sorts of learning to do. They can see the bugs. They hear the cicadas.
It's a big part of it. It's a big part of it.
For them to be able to grow up and be kids is awesome, and that's a lifestyle thing. And that's one of the things that I tell my clients all the time is like, your primary residence is not an asset. It's where you live.
Right.
And pick it wisely.
Also a fair point. Yeah, for sure. I mean, if you would have told me, 6 years ago when I was living in a 1,600 square foot condo that I would have, 2 longhorn cattle and, acreage, probably would have laughed at you, but here I am. It's funny how that works out. Yeah.
So let's talk about the transition from trading traditional futures to and derivatives to crypto.
Sure.
One of the things that I was thinking about before, and I think we talked about it a little bit, was originally futures contracts were done. And to this day, I still tell my clients that are like, hey, what do you think about futures or options? I say, don't do it.
Right.
Unless you really have the mind for it, it's not worth it. It's a good hedge for, options, good hedge if you have a concentrated position. But if you really need that leverage, you're really gambling, right? As we all know, those of us who are looking to accumulate wealth, invest in equities. And then if you want to stay rich, you invest in fixed income, right? And then you've got futures and commodities. For me, I always thought, futures and commodities are really either a hedge or in anticipation of needing something. So if you're a farmer and you know that you want to grow corn and you know that your input costs are going to be $3 and you're worried that maybe it's going to be $2.50 by the time the season's over, you would actually buy a contract saying that I guarantee I will deliver this amount of corn, and then you've locked in your price, right? Now, if it turns out you have a bumper crop, you can always you're going to make more money. Right. But there's there are reasons and situations. Now, there's a lot of companies out there, and I won't name names because I don't want to, but you guys seem to be doing it right. You're allowing institutions the ability to what I like to think of is trade. These vehicles, to accept cryptocurrency and be able to hedge what that's going to look like on their balance sheet.
Correct. Yeah. I mean, we generally have 2 different types of clients. So we have some clients are corporations or institutions that have their own client-facing businesses. Mm-hmm. So they see us more of a sort of like a liquidity and technology service where they're trying to figure out how to offer access to digital assets to their clients. Mm-hmm. So there's a lot of technical integrations and compliance work and due diligence and counterparty risk concerns and things like that. And then the other group of those clients would be groups that are trading more for their own principal risk. So that might be an asset manager or a hedge fund or a miner, or someone who has an interest in physical crypto that is looking for some reason to hedge their balance sheet. The reasons why people engage in those sorts of transactions, if they're involved in the physical production of an asset, like Bitcoin, for example, it's really not all that different than if somebody was refining crude oil or growing corn or something else like they have to make a payment in denominated in yen 1 year from now. What happens if the price of yen appreciates by 50%?
Right.
So there's lots of real world concerns where these markets that were originally designed to, create a marketplace where people who were willing to take risk could take the risk off of the people who are willing to lay off the risk. And that's really not that much different in the crypto option space. But it is a fragmented market. It's developing. It's a lot of it is done over the counter. There's really no centralized authority that determines what these things are worth.
Right.
It's a lot of exchanges and traders sort of looking at each other and trying to determine, what the price is. So it is a very, very nuanced and, there's a lot of that. There's a lot of that. I mean, a lot of it takes place over the counter, in chat rooms and over the phone, and it feels kind of archaic, but a lot of business at the institutional level is conducted this way. And I think that's actually something that the retail world doesn't really quite understand, because they're so used to, their TD Ameritrade account or something like that, where everything is fully electronic and they never have to talk to anybody.
Right. Yeah. So I remember years ago when we first were trading at the branch, and it was, muni bonds. Everyone just thought everything was like electronic. And it was like, we got these magazines, this little blue piece of paper. I can't remember. I wish I could remember the sheet. It was like, clients looking for this. I'm literally looking every day at this little newspaper and call up and say, can I get a bid on that?
Yeah.
They just think it's electronic. Like, no, there's work.
There is a surprising amount of that. That's actually one of the things that surprised me coming from the futures industry, where you had, the CME and ICE and Eurex and the clearinghouses doing all the work. They built this incredible infrastructure where you've got reporting, they're holding your assets, they're generating the statements, they have margining technology. It's all done for you, right? In this market, because there is no central authority clearinghouse, if you're going to offer these solutions to clients, you have to build those things. So companies have their own statement generation, their own risk management protocol, for better or worse, And
there's no hard and fast regulation, so you have to regulate as best you possibly can, which is probably what got a lot of these companies that are sort of in trouble right now in trouble.
Yeah, and that's an interesting topic, and certainly a volatile moment in this industry's history. Yeah. Probably not the last, but certainly there's a deleveraging that's occurring right now. And I think that one of the things I've said this numerous times in the last few weeks, but being at this company and having leadership that has been through some horrific market cycles and more traditional assets, that in a time like this, that is extraordinarily worthy. It's you have a lot of leadership at many firms in our space where there are kids, so to speak, running these companies that haven't been through a bear market before, or a real bear market, like a real one where it's not just their asset, but it's everything.
Everywhere.
That's a very different environment. I mean, having a bear market in crypto in 2017 and calling it a crypto winter, all right, that's a bear market in crypto, but that's not a bear market where everything is selling off and the only thing going up is the dollar. So that there's a big distinction there, and I think that's one of the things I've enjoyed lately, just sort of watching our company, navigate this with some poise and grace has been, gratifying.
You actually brought up a point that I think is really fascinating, and it reminds me of, and I promise I'll get there. When I was in Europe, my last semester of college, I was on the Spanish Steps, poor kid, but luckily studying abroad. And it was pretty early in the morning, and I'm with a couple of other kids, and we're looking down, and there's a Chinese food place in Rome. And these Asians come running out of the Chinese food place, and they're talking Italian. And it blew me away. And I was like, wait, shouldn't they be speaking either their language or English, right? Because I personally didn't get it. And so on that same topic, we've been talking about the dollar and crypto here in the United States, and you pointed out a good point. Not everybody is trading, buying, or working on U.S. dollar versus crypto.
Right.
So those are called pairs, right? So if you do U.S. dollar versus, so if you're doing, how does it work with crypto? Similar?
Yeah. So we quote in dollar terms, we quote in stablecoin terms, but we also quote in euro and sterling terms as well.
Okay.
So we service essentially organizations, many of which who are located in Europe and have their own client-facing businesses, and their clients trade in those terms. So it's really just for us. It's not so much a risk issue or we're doing it as a service. These companies want to be quoted in their native currency. So to us, that's just a function of us, looking at the landscape and saying, okay, there's this many companies that are demanding quotes in these terms. What does it look like for us to have, banking in that? What's the risk? What's the, how does it increase our operational lift? What can we, generate in terms of revenue out of that? So, if somebody were to come to us and say, look, we're going to start up a massive company that is going to generate XYZ in volume, and we need to be quoted in Swiss francs, we would be able to find a way to accommodate, So to us, it's really just a question of service provision, different currencies, but the main ones really are obviously it's dollars, but sterling and euro, not too far behind.
And are there different issues, traditionally you've got the aftermarket in the stock exchange, right? And you've got Japan, you've got Asia, you've got Europe, you've got the United States. Is it similar? I mean, obviously it's a 24-hour operation. Do you guys have offices in different places?
It's 24/7 too. Not just 24. It's 24/7. Yeah.
Oh my goodness.
We have 24/7 coverage,
Okay.
right? So we've got some staff in London, and we have staff in Chicago that works on the Asian session. So we have there's a lot of communication, and our clients know who they're dealing with on our desk. So if somebody is, messaging us and looking for information on a bid offer on, XYZ at 7:00, they know who they're talking to in our office. And then if they make the same request at 2 a.m., they know who they're talking to then. And they know that these people are either in different physical locations, or they just get to know them.
Yeah.
There's still a lot of communication, like I said, that between us and our clients who trade this way. So we do have, coverage around the clock.
I'll never forget, I got my very first time I ever traded options and futures. I had a really good friend named Dan who was working at Fidelity with me, was working by the counter, really smart guy. He got through CFA level 1 and level 2 and never quite made it past level 3. I asked him how he was studying. He was like, well, I just eat Oreos. Just really smart guy, right? Yeah. But he was trading, and I didn't know this is back when Quicken was it wasn't QuickBooks or anything. Quicken, he was tracking his accounts with Quicken. Dial-up mode and whatever. And I saw how much money he had in his account and how much money he was making and losing every day, which was more than my salary at Fidelity at the time. And He was doing the same thing as me.
Yeah.
And it happened because he was trading commodities, and he was very, very good at it. And luckily he was also caught it in a bull run. And so, of course, everything was great. And I started trading a specific currency. It was, I think it was the Thai baht. I don't remember, but it was very thinly traded.
Right. Yeah, that's going to be a thin one for sure.
I got Lachlan down 3 days in a row.
Oh, yeah.
And I learned real quick, that is experience. Experience is what you get when you don't get what you want. I learned that the average person should not trade commodities and not foreign currency.
I've been through similar, limit situations, and there's been some sleepless nights and some mornings where, or some nights where I went to bed and, something was limit down and I didn't know if I was going to have a job in the morning. I've been through that for sure. I know how horrific that can be.
Stressful. Yeah. That's rough.
Yeah. The commodity futures business, just to your point, it's inherently levered. So, that's one of the issues with, with someone who doesn't have a ton of background getting involved. Oftentimes, they just don't quite understand that the margin they're posting to take that position might only be, 1/5 or not even a fifth. It could be, 2% or 5% or 10% of the underlying value of the contract itself.
Right. So you've got all that way to fall if you actually.
Right. And listen, leverage properly employed, fine, but the reality is that the majority of people who trade, especially, intraday or very actively in those products, it's hard to win.
Yeah. It was going back to the history of the stock market. If you look at what happened with Black Friday and it was the same thing. It was all leverage. You had taxi drivers. Everybody was invested in the market, and I get a lot from people. I hear it over and over again from people who say, you didn't predict. How do you predict the downside on that? You can't. That's the nature of a bubble. Is that when it implodes, everything goes down. Yeah. Everything, every company, all the good ones and the bad ones. There's a problem, and if you're improperly margined, if you're margin to the hilt and you get a margin call, you got to cover that somehow. Whether it's selling your house, your car, your
kids.
Liver.
Yeah.
But that was the thing, prior to that event, I think the margin was similar in the regular stock market. I feel like it was you only had to put up a really low percentage, may have been sub 10%, right? So people didn't realize that, wait, if this market goes down, I'm going to lose substantially more than I even have, right? And that factor still exists in some traditional commodities, right?
Sure.
And that's probably the same thing with crypto to some degree. So that's the fear of of margin.
Yeah, well, I think the leverage the leverage being sort of washed out of the system right now. As violent and sad sort of as it is, with the benefit of hindsight, it feels like maybe it was necessary, and I think that there's going to be some companies that really come out of this in a strong position. There's going to be a regulatory impact. I think that I don't think it's going to slow down necessarily dramatically the adoption of things like Bitcoin into the traditional financial atmosphere. It might slow the rate at which these projects happen at the speed at which they occur, but I think at the grand scheme of things, things are going to still move ahead. I mean, we're seeing so much investment and attention, and our onboarding has sped up. It hasn't slowed down. I mean, we have so many more inquiries coming through our site, and referrals, and it just does not seem to me that companies have really chosen to take as big of a step back as maybe everybody might think.
Yeah, and I was fascinated by going down to Consensus, and I noticed a couple of things. The first thing I saw was how many people
It's massive.
were there. It was
that was
massive.
a big show. Yeah.
In addition to that, how many smart people, right? And so one of two things, maybe three, but one of two things that I think of is, what if we're all wrong?
Yeah.
And then the second thing is, if we're not wrong, and there's this huge, massive wave of unbelievably smart people creating stuff, they got to come up with something good.
One would think, yeah. I mean, that was an interesting show, and I had a great time at Consensus. I met a lot of excellent people at that show. I think that there are people who have no relationship to crypto at all are starting to hear about these sort of like theoretical use cases. They hear things like NFTs, and like at first they kind of laugh it off as a joke, right? And then they sit down and talk to somebody, and someone will explain to them that, you mean an artist could actually control their own destiny through ownership of their product, and that every time that changes hands, they can actually earn something,
right? And
they don't need a record company, taking all their money. I mean, like, you start to explain these sort of real life use cases to people, and you start to say, okay, all right, I'm open to it,
right?
And once that starts to happen, I think you're going to start to just see sort of a tidal wave of acceptance, and then there are going to be some. I think that kids now are going to start to learn about theoretical use cases, and there's going to be applications to things like insurance and title companies, and that we're learning about the use of private blockchains from companies like Walmart. And how they're using it to track and reduce like shipping disputes. I mean, it's really these things are this stuff is happening. Okay, the question is how many people are gonna day trade a token without knowing anything about it. I mean, of course there's gonna be people who do that, and
there are people that do that right now with commodities, right?
Yeah, absolutely.
So you don't own a farm, but you might want to trade corn futures,
right?
Or vice versa.
Yeah, well, the USD report's coming out tomorrow. I'm going to get long or whatever. I mean, that is going to continue to happen. I don't think that's particularly unique to crypto. I think there was obviously a bit of a hysteria, and everybody was thinking up only, and we all kind of were brought back down to earth, right? But from an adoption standpoint, the sheer number of inquiries that even just Blockfills, just that we are getting, I have to think this is just being repeated, many times over globally with firms who are in the service provision business like us, and it's a sign to me that that this is it's gonna keep going.
Yeah, I think it's interesting that one of the things that I find fascinating about my side of the business on the retail side is how few financial advisors are young. Right, and the ones that are young, I've become that guy. You've never even seen a bear market.
Right. Yeah.
We've had such a long up market that people just are expecting that Fed put.
Right.
And that's not necessarily something that will always happen, as we know from the history of of how long we've been in the industry.
Yeah.
So when you were talking about Nick, who founded the company, who's been through this, and I get a lot lately, they're like, oh, do your clients come up to you and tell you how bad the market is? And I'm like, well, my clients, I've got a pretty mature book. My clients have been with me since, more or less 1999. We've been through
Quite
three or four of these dislocations. So with the exception of one, there's always one.
Yeah.
For the most part, my clients leave me alone because they know that I'm doing whatever I possibly can.
Yeah.
And I think this is going to be a really great moment for people that are new to the industry, people that are on the phones at these different companies who will make it through this correction, this recession, this depression, whatever it turns out to become. They'll have experience and they'll know how to handle it, right? It's kind of like being at the Super Bowl your first time versus being there the fifth, right?
Yeah, that's a perfectly valid analogy, and I think that's also, I do happen to agree with you. I mean, these, let's call it, I don't want to generalize too much, but 25-year-old crypto native, done some stock trading, maybe did some GameStop and AMC trading, really interested in this whole thing. They're going to come out of this with a lot more knowledge about themselves. They're going to learn about, they will have learned how they handle risk. They will have been forced to be very honest with themselves.
Should I have been a trader in the first place?
Yeah. I mean, this is going to be easy. We've all been through this stuff, we all have to come to terms with our, idiosyncrasies and failures. And, you hope that people can bounce back and be ready and kind of put their heads down and get ready for the next run, whenever that might happen,
Yeah. How about, so in your history, like I know for me, one of the things that I find pretty difficult is that, I try to take on an intern or two every year or every couple of years. I try to get them whenever they're in their, junior, senior year, just to kind of train them up, teach them how to not be that new useless guy whenever they actually get to whatever company they get to after they grow up.
Sure.
How does somebody get into, it used to be that you could, there were so many people that were on the floor, they'd have runners, there were all these different things. How does somebody get into trading now? It just seems like it's almost like you'd have to know somebody to get in to be involved in any kind of trading. And people tend to have this problem that they actually think that all of us do the same stuff. Like, I trade. I literally have my finger on the trigger, I'm on the box.
Right.
Okay, that's great. But it's a different thing.
Yeah.
Right? It's not, commodities is different than fixed income.
Yeah.
Different for everything else.
Totally.
But trading is still trading.
Yeah.
And how do you know if you have that personality? And if you did have that personality, and you probably might be good at it, how would somebody
get involved?
Start that? How would somebody do that?
Yeah, that's an excellent question. I mean, I think the fact that all of these sort of pay to have a chance to be a prop trader companies have popped up over the last 10 years goes to show that there is a market for this. Companies that launch that say, okay, you pay a fee, take our classes, we're going to train you on our platform, and then you're going to trade, and if you lose a certain amount, we're going to cut you off. But if you start to make money, we'll fund an account for you, and then you get a profit share. I mean, there's an entire industry built around this. So if you are just a really apt market technician, and you think you have your head screwed on nice and tight, and you want to start from the bottom with no connections, that's probably one potentially viable way to do it. I would say the failure rate there is probably pretty high. But not to say it couldn't be done. I think that these companies, they're responding to a need in the marketplace. But for just kind of sharing what I've seen at Blockfills, that's a difficult proposition to try to take on, because there are so many similarities between our business and, say, like the legacy FX option business, that for a company like us, we would want people who have experience in that market. And the people who have experience in FX options, for example, they've been at this for 10, 20 years. So it's the operationally, we need smart minds, we need developers, we need people good at process, we need people to help make things more efficient and help the company coalesce and be better. But from an actual trading perspective, we're either looking for the types of people who are like algorithmic, have quant backgrounds, or people who have like very strong FX backgrounds and relationships.
It's helpful to have math skills to trade, to be able to trade.
One would think, yeah. So there's a very active sort of technology-driven part of our business that does a lot of cross exchange, trading and arbitrage trading, and it's so to be involved in that, you obviously have to have a certain pedigree. But
I was so blown away whenever I heard this one story. I had such a fascinating job. I was so lucky to be literally at the mouth of Wall Street, where all these traders have their accounts at Fido, and I get to sit down with this one really fascinating guy who was a trader, a $2 broker originally, and then he ended up, which is basically somebody who trades his own book, but will take trades for other people, for those of you who don't know. And he ended up getting bought by Fidelity. They leased his seed, and so he was just trading directly for them for quite a while. And I asked him how he got his start. He was telling me about how he was going to get drafted. He knew it. He wasn't going to school. He was going to get drafted, and so he was on the bus and he got off the wrong exit and ran into a buddy who happened to be a trade runner, who was a runner for a guy on the exchange. He goes, "Hey, my buddy needs it." And he's a guy from Brooklyn. I mean, God, so many of those guys are from Brooklyn on the floor in the New York Exchange. And just how he got started. And you just, at first you really actually think about it as like, wow, that was just a lucky place to be. But then I asked him about, how he separated himself from just being a runner to actually getting his own trading in. And it was all math. It was like he just had that amazing aptitude, because and what I didn't even think about was like, if you're a crude trader, but you see that there's a price discrepancy in natural gas, you can cross this contract with this contract and then make some, and it's just like, I was like,
I had a few friends like this too. Some in the being in Chicago, the Board of Trade, I had some friends in like the soybean option pits and stuff. These were guys who were really great at fractions, like scarily good at fractions. So it would be the kind of thing where we'd be out at a bar, and this guy who was like the smartest one of all of us and really good at math would be like creating hedges against people finishing their drinks. Be like, Tom, like, I'm going to bet you, $50 that like you can't finish that drink before, Bob over here, he's like, you're going to be able to finish that before he finishes half of that. But if neither of them do it, and he would create these like complex hedges, and he would just win. He's one of these guys that was really he was great at fractions, like really, really sharp. And you'd look at him, and you just wouldn't think it. But he was a rock star on the floor. For as long as that business was there. So it's pretty remarkable how some people find their way into that business, and then certain some of them have certain skills that really just allow them to excel. Whether that might be like nerves of steel, or or just math, or some combination thereof. But
there's it's the hedging. It's all about making sure you're managing that downside risk. And obviously, there's a lot of companies that didn't have that, right? They didn't, as I said, for the past 20 years, we've been in QE infinity. And there was always that put there. And now we don't have that put because they have to manage inflation. So now people are like, ooh, we really have to manage risk. And you guys have always been set up that way. I think a lot of these other companies, no news here, but today we found out that Celsius said that they're going bankrupt. And I think a lot of that has to do with the fact that maybe those people, whether it was a grift or maybe they just didn't know how to manage risk properly from the very beginning because they never had it. And I think that's going to be a real learning curve. I think there's going to be a lot of people that grow up and learn real quick that you need to manage risk in any portfolio, whether you're just starting out and you're executing trades on IBM, or if you're doing it on crypto, if you're doing it on anything. But it's fascinating. We're in a fascinating time.
We sure are.
Well, I appreciate you coming in and talking to me.
Thanks, Frank.
The first new episode of Money in the Bank with Frank with video.
Great studio, like I said. Awesome.
Thanks. Awesome, Patrick. Thanks,
Frank.
Take
All right.
care.
See you. Thank you.
Thanks for watching. If you like this content, you can find me on Money in the Bank with Frank on all of your favorite podcast platforms, on Facebook, on LinkedIn, on our YouTube channel. Look forward to bringing you more content like this in the future. Thanks.